All right, happy Friday to all you trade devils out there. Here we are on the 30th. It's about 12:30 for me. Now, of course, we're going to look at Bitcoin in a second. It's getting pretty interesting up here, so we'll get to the TA in a minute here. But before we do, and this last time I'm going to do this here, just a reminder here that we've got our Halloween promo running. And while I've mentioned this a few times this week, and many of you have taken advantage of this, if you're on the fence, just a reminder here that at 31%, that's as low as we've ever gone as a discount for the educational membership. And just a reminder, this is for educational membership only, but that 31% off is a pretty good number. So if you've ever been thinking about that, this is about as good a price as you're ever going to see. And just to remind those of you that might be interested in some of the things we're doing with NinjaTrader and all of the custom tools that we've built over the last year, 21% off of all of those indicators as well. And you can look for those of you that are interested that either have Ninja or are considering using it for day trading you can use it for traditionals, FX, equities, but we tend to use it almost exclusively for trading in the traditional futures markets. But that's 21% off, and we will have some new videos of some new tools that we've been working on over the last few weeks. So look for that over the weekend if that's of interest to you. All right, so with those two running, again, just remember here, it's educational. It's off the educational membership only. Okay, there you go. Let's take a look over to Bitcoin. So here we're picking it up from last week. I think we were on our way to approaching this. So as we sit here now, I mean, could we have scripted that resistance much better? I don't know that we could. Now let me take this off just so you can see what I'm outlining here. So I mean, here it is. As we sit in the golden zone as I record this, right? So right here we've been waiting for this test. When was that? June of 19, we've been waiting for the retest here. Well, here we have it, Friday the 30th, right? Well, I guess you'd say the 29th, we got a little test in there as well. Went up and tagged the 65. Now, looks like we're going to try and tag it again. The two things that I have here, and the reason I had that drawn that way, so we have, and I just a quick review because we went over this last week. So if I'm taking the swing length here down to the pivot, if I go up exactly 100%, that's what that 100 is. And then if I take the length of this swing here from that last push down, and then I come up this direction, the 1618 of that distance is right here on top of the 100. So if we're going to get through this 65, those are the next swing relationships, as 100 not being a fib, but these are the next swing relationships we might look for. Now, again, as I mentioned last week, if we were to hit this and bounce off of it, I mean, you might anticipate that there'll be some algorithms tied to that. Now, as to whether or not that would trigger something substantial remains to be seen. Remember, we're trying to get to that median line, right? So we know, despite the fact that this is very deep, this still maintains 80% odds of getting there. So again, as I mentioned previously, we wouldn't want to see that fail, because that would, per Andrew's trading principle, trading principle number 4, a failure to make the median line sets up a move equal to or greater than the swing that failed to get there, right? So. Right. And while there are many who still think that that's the count that we're in, which can eliminate it, but we do want to see it tag that median line, just to not have me feel long, obviously, but just to eliminate that possibility here that we fail to get to the median line. Now you can look at it here and say, oh, we hit it. No, that's past, right? So the pivot being here, even though that's an interesting confluence point, we got to get it. Well, I mean, we could do this, right, and then get it down the road. But at some point, we want to get that to eliminate that potential technical event of failing to get there. So I just bring that to your attention. But as we sit here, it's just in there. I mean, how many times have I shown that? 5,000? 5,000? And yet people still not so sure about that. I mean, right? That's what more do I need to put in front of you? There you go. Now, again, the idea here is that if we're going to get through, we want to get through this with some conviction. Now, granted, that would give us the tag of the median line, but we want to get through here far enough so that there's a legitimate retest. Well, it could be here, could be here. We want to see that kind of retest just so that we know that power players and whales, which are more prone to take that kind of a approach to it, we'll have some more conviction if we get up here, and it doesn't matter where we go here. At some point, because of that being resistance for so long, you can anticipate that that's going to need to get a retest, right, before you get a lot of conviction here in trend followers, price action traders. All that kind of retest here would be extremely positive to this trend continuing on. Right now, it hasn't happened yet. Right now, we're just sitting in the golden zone. But it is interesting as we sit here, as it wrestles with that. This is our last little retrace trade that we took at 10.2. Well, that's the one I took at 10.2. It actually went a little bit lower, which was, oh shit. I mean, we spent, I don't know, a couple of months just waiting for that to set up, and then finally got the entry we wanted here. So if you were long there off of the 10.2, as we had suggested, I don't know, 6 weeks ago, it could be that long, or early September. Yeah, it could be. This wouldn't be a bad area to, at the very least, be tightening up your stops, anticipating, right, as I talked last week, who's still there defending. Right, well, we know that the algorithm that's here. Now, granted, and somebody made this comment last week, we have a target down here that's below a zero. So obviously the target is, we're not, let's use common sense here, right? So an algorithm's not going to stay. Well, it's funny. I say that, and I remember drawing up the same thing in crude, saying, well, we've got a target below zero, but obviously crude's not going to go below zero, and I'll be damned if it didn't do it. So, but we're not likely to see. Well, again, the odds of a retest down here, I would put that on the lower edge of the odds spectrum. But here we are sitting at resistance. So now, can we get any TA in terms of what's happened getting there to help guide us through where, how to maybe time the reaction here? Well, of course, we're going to go down and look at this on some smaller time frames. Now, what's making this interesting is we have multiple counts here. This is often the case with Bitcoin. The Elliott is challenging. It's never drop dead. Well, I shouldn't say never, but rarely is it drop dead simple, because we've got multiple ways that you could count this. Each are perfectly technically valid. So this remains my primary count, but I'm going to show you the alternate, and it would suggest if you don't have multiple counts right now, before I go through the two that I think are here, I would encourage you, as I often say, do it yourself. Right, members, I know you've all done it, but if you're watching out on YouTube, do it yourself. Don't wait and have me walk you through it. Do it yourself. Take your best shot at it, and then come back and see if you can get through this. If you get a similar count, or if you get an alternate count but it's valid, I'll be curious to see it. So right now, it's the largest, the whole premise. Well, shit, I have to go to an 8 hour here. The premise being that we've gone off of our low. We've got a 1. We've got our 2 is in. Right, 1, 2, shallow 2. Right, we've talked about that. Oh, let's see here. Let's go to a 2 hour here. There's the 2. Now, this is what's making this tricky. Now, one, note here the initial, just the traditional Elliott channel that I've gone. I've had to double this, right? We've gone 2.5 times to get that edge. So the geometry is fairly consistent here. So 1, 2. Well, now here's where this is getting tricky. So we got a clear 5 into this 1. We got a nice ABC into this 2. Now, where's the 3? Because the subdivision here lends itself to multiple counts. Well, right now, I'll show you why this remains my primary count. I think that's our 3 that's just going in, and we're working now on our 4. Come down here, right? And as I've suggested in various videos about my expectation of high volatility. Well, shit, who's not expecting high volatility around the election? But my larger point is I'm trading with a 99.9% conviction in terms of my trading in the broader markets that we're going to have a contested election. I think there's almost no chance we don't. Doesn't matter who's winning. The other side's going to contest it, right? I've never been more certain about anything in my trading career. I am absolutely sure we're going to have a contested election. So I'm going to trade it accordingly. Now, I say that in the context of, well, if we're going to have a contested election, clearly that's going to be problematic for the stock indexes. What's it going to do to Bitcoin? Well, I think there's a reasonable probability here that Bitcoin we could see some retracement. I'm not saying sell off, but to see some retracement as that uncertainty goes across all of markets, which would set up the 4. right? Because I don't think we're doing that. But to come down here and test any of this structure down here, you actually want it. Even though I know it's human nature, right? Just keep going, just keep going. You really want this to come down and retrace, because that gives us the reload, the energy, it's like drawing the bow before we can get that kick. We need that kick to go up here and complete this 5. And then the question will be, what are we completing, right? Is it the 3 or the 1 of the 3? But I'm going to, having shown this, right, and I would encourage you to, experiment with this, right? So you can see what I've done here. So I've got 1, there's a full 1, and then let's see if I can bring this back right on it, right here, and then here's the second one, right? So we've doubled, well, pardon me. Although that may end up being what we use. Right now, I'm just going half of it to catch this upper corner. But I'm going to take these off here just for the time being, just so we can look at some of this wave structure here, which is what is making this really interesting for Elliotticians. So right now, you can think 1, 2, and then the 1, 2. Well, there's just a beautiful impulse here. So you got to reconcile this. All right. So first off, let's start with the larger degree. So from the swing, God damn it, trading view, from the swing low to the swing high, right? Projecting from that 2, get it right on it. Well, we've just clipped the 2618, right, which is an extreme for a 3. I mean, granted, we've seen them go further than that, but that's a very typical wave 3 location with a fairly big kick in the 3rd. So the fact that we've gone up, tagged that 2618, and then we had a reaction. Well, this is just where you'd want to put the 3 if we're not going to use the 1618. Well, but slow down here. That's what's making this challenging. So looking at the subdivision here on how we get here, well, we can get here a couple of different ways. Now, this area here is a bit problematic for any type, whether you're talking about an Elliott count or a Wyckoff accumulation or potentially a distribution. This is challenging here, but even just the wave relationships. So look at this. So if we're thinking 1, 2, well, one possibility is that we've gone 3. Right now, that would put the 3rd, if it was 1, 2, and the 3rd that I have here is up here, and there's a count that can get there. Well, then you'd be way beyond the 2618. So just in terms of the probabilities and typical wave relation, well, here, I'll draw it. The distance here, look, we're so far beyond the 2618 that becomes, while not impossible, right, obviously, right, but just lower probability, because if I do the same thing, if I take the length of this 1 and I project from the 2, what do I get right here? All right, so I'm just ticks off of my 1618. If I've got that that was a little tighter, if I've got that right on my 1, there we go. I knew that was a little tighter. So if you'll see it here, I know this gets a little hard to see. Let me open this up. Okay, so from the length of my 1 projected from the absolute pivot low of my 2 going up to my 3, well, here I am in my 1618, 175 window, right? So I know that's the highest probability location for my 3rd. So relative to this internal swing, I want to put the 3 there. Okay, all well and good. Okay, I've got a clear impulse that would get me there. So I'm inclined to leave the 3 there, ABC into the 4. Now I get a pretty good kick in the 5, right? So it would be perfect fib relationships from the 1 to the 3, but the extension in the 5. So then you look at that and you think, okay, well, let's just use some more typical Elliott wave relationship fib swing relationships and see how we come out. So let's take the length of the 1 through 3. If we're going to get an extension in the 5th, let's take the 1 through 3 and project it from the 4. What do we get here? Right? We're back into that 1618, 175 window. So if we're going to have an extension in the 5th, the 1618 is your target, and we've just tagged it, and then look at the reaction. So we're kind of building a case here saying, okay, well, that looks like a good location for the 5. Well, okay, yet again, how about the internals in here, which is part of how we go through the deductive reasoning here. So if we come down here and look at the internal swing of that 1 to that 2, right? 2618 here. Here's so that's getting me 1, 2. I'm going through the 200 here for a big 3. So it's a 1, 2, big 3, 4. I'm getting the 2618 on the 5, which again is a reasonable target for the extension here. Now, if I'm going to go 1 projected from the 4, if it's not going to be the 100, the next target is the 127. If I take that off, we are just tagging the 127 to the tick. right? So I've got a lot of confluence around each one of these swing pivots here that is encouraging me to count that the count I have here is, well, is a good candidate for your primary right now. So there's an alternate count here, which we'll get to in a second. But if it's 1, 2, 1, 2, there's my impulsive 3 down for the 4. Well, I've got a bit of a challenge here on how I'm going to count this. Well, this gets definitely a little bit tricky. So what I'm doing here, and thanks to Sensei Tudum, who really, I think, nailed this in his video yesterday. I think this is from an Elliott perspective, this is the count you have to go with here. So from this pivot here, we get a 1, 2, 3, 4, 5. We get an expanding diagonal here in the 5th. So we complete that 5 relative to this 3 with a big extension. Now you've got it gets a little skinny here on the first bit. So you got to go 1, 2, 3, 4, 5 to get up there. So this is not much of a 2, but you can still make that work. But this is kind of an interesting little problem here. 1, 2, 3 longer than 1, and 5 clearly longer than 3. So I've got a legitimate diagonal here with which I can finish that into the 5. Now, that's would be a primary with the anticipation that if that's 1, 2, and I'm going to wick off this 1 as well. All right, so kind of laying up all the potential support locations that we have, and the big one being up here, and then this prior structure. So if we're going to start projecting for if indeed, right, remains to be seen, but if indeed we're coming from this pivot here, that potentially an A wave, if we're going to put in a B wave here and then come down and give us a 3-wave correction here, well, that's going to start to look pretty good. So thinking about where that might come in, and again, all I'm doing is wicking off the larger pivot here. Well, just Elliott 101, we're going to swing for the length of the 3rd. Where would that put the 4? Right at the 38. So we'd have this combination of, well, really you could do it a couple of different ways. You could take all of this, much as I've done here. Here, let's just do it this way. All right, here's where your area of interest, as I like to say. So if we're going to come down here, if this is going to be A, B, and we're going to come to the 38, between the 38 and the 50, and then all of this structure, holy shit. Now, so you think about it, right, as I was just trying to suggest. If there's volatility as a result of the election, you might anticipate that Bitcoin will soften along with all major risk assets as we come down here for a potential retest. If I see that, we get the opportunity to buy it in 12.5-ish, boy, I'm an aggressive buyer there, right? So very clear as to where to put your stop, right? You can use all of this structure, all of this for stop out locations. So you've got, I mean, the risk reward there is really pretty attractive. So if you start thinking about a reasonable target up here and put this together like this, so let's see what we could do here. Just go after that as a target and put it under the 50. There's 4.85 to 1 on the assumption that we're just going to go up and that's going to be our pivot high here. I mean, no, shit. I mean, as I like to say, why would you not take that trade? Oh, well, I think it's going to go a lot lower. Okay, well, then wait. Not sure of it, because if it comes down, it could come down aggressively. Everything's selling off, Tuesday, Wednesday, when something else. I think we all can agree we're not going to have a result on Tuesday. Very low probability, right? And even if we do, the other side's going to be bitching about all the mail-in votes that still have to be counted. So there's that possibility here. So perhaps we get, So here that's the day after the election for potentially a test here of this structure. If right now we don't know, right? This could. I mean, there's actually a 5 that's potentially could be playing in here, but it doesn't look like that'd be much of a 4. But if this were going to go 1, 2, 3, 4, 5 and into a diagonal to start this off, right? Then it may be that this is all we're going to get. Although this for the 4 relative to the 1, 2, the size of the 3, low probability, right? So I would not be longing that on the idea that the 4 was in here. Low probability. It's a possibility, but low probability. This trade I love all day. Now we start to put some more things together here and just eyeballing that, right? If this were to be the 4, something like that, right? You can see how the geometry would really support this. So a big if, right? If we're going to come down into this, right? And ideally you'd come down, you'd get a clean 5. That's what I'm playing. Right? That's what I'm looking for. I'm looking for this, for that opportunity to buy down here. We're just going to call it 12.5 for round number. Target 14.707. This is in my view, that's a must buy. Now, put a fucking stop on it, but that's very viable. And I get a question, right? Is it offered down here? If it's offered under 12, if you don't want to be aggressive, get a piece there, right? If you want to wait and see, do I get a reaction, which is always the safer thing to do. I don't know that I'd be sitting there with a limit order, but I sure as hell going to be watching. Wait, you want a little retest to get a little more confident, then you can use this as your stop, right? Get that, right? Now we're off and going. So that all looks good here. Now, but before we take, how am I doing, 20 minutes? Okay, before we get off on that, let's just consider the alternate count, which I think I have here. So the alternate count would have, where we had done it this way. All right, this is actually more bullish. If we're going to go, we went 1, 2, and then we put the impulse 3, 4, and we were up in the 5, right? So that was the alternate. Well, pardon me, that's the primary. The alternate here is allowing for one additional leg, right? So we'd be doing it this way. So from the pivot here, and I know I've talked to my senseis and a lot of my members, there's kind of a mixed, almost a 50-50 as to which count is people are using. So you could go 1, 2, and then yet again into another 1, 2. Now it gets really skinny up here to get this to work. So you'd go into your 3, which, by the way, if I take this off, right, here's what's making this challenging. So if you take that same rationale and say, okay, well, let me get the length of my 1 projected from my 2. Well, here's the internal. We don't get the 1618, but we're getting the 127, 138. Little pullback for the 4. Go up, we'd get the 5 of the 3. All right, so it's valid. So it'd be 1, 2, 1, clear 5 into that 1, 2, 3. It's a little skinny here. So you're trying to get the 3, this 3 relative to this 1, 2. So if we go this one again, right? Now that's why this is not my primary, because we're so far gone for this to be the 3 up here, A, B, C into the 4, and you got a skinny little 5. Possible, right? It's not a viable count and something that could get us out of this. We're still looking for the buy in the same location. If we're coming down here for the C at the 4 relative to this right here, we'll put it back together. If that's going to be the C of the 4 at this degree, and we're just counting the internal swing relationship differently. Well, if I take that too low here, right, same location. So it's just a question of, did we put in, which 3 did we put in here? All right, if it's coming 4, 5, well, this would imply that there's another leg still to go. All right, so whether it's 1, 2, 3, 4, 5, or 1, 2, 1, 2, 3, 4, 5, you're still getting to this big 3 here. It's just how you want to count the internals. All right, so all that said, I think the primary over here is the better looking count, because I think the only really solid count here, the other one is you're really squishing it in there. It's a little bit of an Elliott shuffle to get it to work. Whereas the expanding diagonal is a cleaner count. All right, so still looking for 3, 4, 5 to go up there. All right, so what am I doing? 23. The last thing we can. This is the Wyckoff here has gotten a little bit tricky. Now it looked like potentially you had a distribution with a big upthrust here after a little bit of distribution. So you can make sense of this coming. Oh shit! What do I want to do here? 30 minutes. Let's see if I can't squinch it. So coming off of the distribution, they look similar on a different degree here. So this looked. Let's get this up here. Like this distribution here was starting here, much like this one did, right? But all we did was go back into another reaccumulation before we kicked again. Well, if we look over here, we had something similar. So you can, I mean, it's not ideal, all right? But you can, I'm interpreting Wyckoff here best that I can here, given the price action here. This looks like buying climb X automatic rally, or automatic reaction, wouldn't be a rally here. Secondary test, sign of weakness, upthrust, more sign of weakness, upthrust with some distribution. Now, you would have anticipated here, if that was going to be a true distribution, we might have done that. But now it looks like we're going back into another accumulation here. So this could be your selling climax. So selling climax, automatic rally, right here, and it looks like some up thrust here, and I will have to see as to whether or not there's going to be enough here to really call this a reaccumulation, but damn near looks that way. So, and then you can see the potential 5 that's in here. If this is going to play that way, there's another, just as this was a diagonal, there's another potential 3, 4. If that goes up to get a new high, well, you can't eliminate the possibility here that that's an expanding diagonal once again. So tricky here. This needs a little bit more price action here before you get a lot of conviction into this. I mean, just sitting here looking at it, you can kind of, least desirable feature of trading view. All right, the multiple clicks. All right, so, right, what do we got here? Remains to be seen. Trick. So I prefer I think the Elliott accommodates this better than the Wyckoff here, based on the wild swings that we have up here. But Wyckoff traders probably disagree with me. But just as we introduce this into some of our analysis here, this is getting tricky. This needs a little more reveal before you get a lot of conviction into what we've got here. All right. So I think all of that said, here's I'll leave you with this one. This is, I think, really one to be paying attention to. No matter how you count the internal, if we get a retrace here, you know, maybe you don't lever the shit out of that, but you would want to bite here. Right? At least take a bite there, because this is such the pattern here is solid. There's really, you're combining all sorts of different technical approaches here. It's just straight price action. Prior resistance becomes the support. You got a fib retracement. You've got geometry. You got an Elliott count, and you've got some Wyckoff in here to mix. So you've got a lot of ingredients here to support the idea. Well, in addition to that, look, you've got a low volume node right there, because there was no market acceptance here. So if I just take this and here, let's do it this way. All right, so if I draw this all the way over here, look, no market acceptance. Big hole in the volume profile, because there's no market acceptance here. So as I've often said before, what you'll find when we come down to these low volume divots, there's no acceptance there. So either it's quickly rejected or it just falls right through it. And you go, well, fuck, how does that help me? Well, it's an area to be alerted to, because you'd anticipate here with everything else that's going on here at this price point at 12,476. What you'd be anticipating here is more of a rejection of it. Now, if it cuts through it, right? Well, where's the next? Then you're looking for high volume, right? Where's the next place? Well, here you could do the same thing. You could just do this. Come here, right? Just kind of do it that way, right? Between the 50 and the 618 off of this pivot point. Well, here now, again, it's visible range. So that's the with what you can see here. Well, now it's moving here. I'm going to go back here. So, but here the 50 and the 618. So here's the high volume level right here. So if we're going to come down here and we get something more substantial, still, right? You'd take the stop here, which I will comfortably take that stop and then be looking to reload down here, because where am I out? Where am I wrong? Where does the count break down? Right here. So if I could be a buyer at the golden zone here, well, look, my target hasn't changed. I will have had one loser here. If I can buy it down here, right? Well, here's my stop. Here's my target. Target didn't move. Now I got a 6.72 to 1. So giving me the math to help me offset that loser, if not end up net positive, depending on what kind of size you took on the first one, what kind of size you take on the second one, but you'd have the opportunity to get well plus some. So either one of those areas, very attractive, and we can't eliminate the 50 as well. Right, you got structure at the 50 based on the pivot here. So there's also, each one of these are potential. Shit, if you're long term and you have the resources to do it, start at the 38, add at the 50, ladder it in the last push at the 618. Right, all of that. That's a function of your risk tolerance, your account size, what kind of drawdown you can withstand here. But my suggestion would be put a stop on it. Right here, very clear, because then the count's just breaking down, right? So if we take out this pivot, you'd want to be out. All right, guys, there you go. Plenty to chew on. I'll be back very shortly for members, and we may get it up on YouTube as well with the S&P trade going into the election. Okay, guys, back to you shortly.